Good morning, everybody. I am Devarsh from HDFC Securities, and welcome to this fortnightly market outlook video. First, I will take you through the key developments. After me, my colleague Vinay will share his insights from technical, and then Siddharth will come in and share his view from derivatives perspective. In the end, I will try to conclude. So let's start. Key developments over the last fortnight. In US markets, banking giants like JP Morgan Chase, Wells Fargo, and Citigroup came out with their numbers, and their numbers were better than the market expectation, mainly because there was a lot of movement of deposits to these large banks from smaller banks. So the combination of moderating inflation and deaccelerating US economy means that the Fed is about to end its aggressive rate hike cycle. And locally, IT companies like Infosys and TCS have announced their numbers, which are lesser than the market expectation. Now, in order for indices to do well, the poor performance of IT companies will have to be overcompensated by banking stocks. Now, let's look at what has happened in some of the important instruments over the last fortnight. So Indian rupee is remarkably resilient, and around 83 it has made a multiple tops, and it is likely to remain a top for a while. This is because dollar index is weak. As we can see, it has come down to a strong support near 100. If it were to break the 100 level, then it will mean a lot of flows out of US into other emerging markets and commodities. S&P 500 is doing quite well. After bottoming out around 3500, it has climbed back to 4100, 4200 resistance. If we were to look at the economic calendar for the rest of the April month, the important days are the 28th of April, where BOG is going to announce its monetary policy. So let's look at the indices and their performance over the last fortnight and last 1 month. About 5 to 6% is the gain for all three major indices of US, and other markets are also have gone up between 3 to 6%. Same is the case with Indian indices. The mid cap and small cap has started outperforming the larger indices over the last fortnight. Now let's look at the performance of sectors over the last fortnight and last 1 month. As RBI announced the pause in interest rate hike, the interest rate sensitive sectors like real estate and auto had a good last fortnight. Reality is up by almost 10% and auto is up by 5%. IT companies have underperformed, and the way recent bellwether results have come, we think that this underperformance can continue for some more time. Banking is the sector which is likely to outperform the indices over the next fortnight. So that's all from my side. Now I'll invite my colleague Vinay to share his views from technicals. Over to you, Vinay.
Hello all, myself Vinay Rajani, Technical and Derivative Analyst at HDFC Securities. Today I am going to share a technical outlook on Indian markets. So let us directly start to the slides. So let us start with the Nifty daily time frame on a shorter time frame. So in last session we saw that it was a ninth consecutive session. Nifty closed in green, and Nifty has also surpassed the crucial resistance of the previous top, which was placed at 17,800. Nifty has closed at 17,828. Now the next resistance we can see over here is the next previous swing high, which is placed at 18,135. So overall Nifty is in a bullish trend, and here we can see that there is a 50 days EMA and 200 days EMA. Both these moving averages are giving and coinciding at the same level, which happens to be around 17,500. So 17,500 is a very crucial support. We can keep it as a positional stop loss in the long position of Nifty. But as far as Nifty short term support is concerned, I think 17,700 is a very strong support, which happens to be the last session's low. So 17,700 is a short term support, and positional support is placed at 17,500. Overall we believe that Nifty can continue its bullishness, and stock specific, sector specific market can remain bullish, and next resistance for Nifty is seen at 18,135. Now let us look at Nifty short-term time frame on a different perspective with the help of indicator. So I have used the disparity index indicator, which shows that underlying is how far is the underlying placed from its moving averages. So I have taken 20 days and 50 days exponential moving average and have plotted on the daily chart. And here we can see that this is a 20 days disparity index. Here it is showing the advanced buy signals. That means it is the highest point since the starting of the January month. Though Nifty has yet to cross its previous swing highs, which was made in the January and February, but disparity index is showing advanced buy signal. It is at the highest point in last 3 months, which shows that there is a higher chances that Nifty will continue its bullishness. Here this is the second indicator, which is 50 days exponential moving average disparity index. Here also we can see that it is giving an advanced buy signal. It is at the highest point in last 3 months. So though price has not crossed the previous highs, swing highs for last 3 months, but somehow this disparity index, which used to be a contrarian indicator also and leading indicator also, it has clearly given the bullish signal on the chart. So that therefore we can say that even if market correct from here or running correction comes out, then it can be utilized as a buying opportunity for the short to medium term. Now let us look at Nifty on a medium term time frame. This is a Nifty weekly chart. As you can see over here, this is a downward sloping channel adjoining the previous swing highs and swing lows. So last week we saw that Nifty broke out from this channel resistance and closed above that decisively, which is a very good sign. And here is a DMI indicator which has just crossed the minus DI line. So plus DI has crossed the minus DI line on the upside, which indicates that bullish trend may continue. Here RSI has already given breakout from the trend line and it is above the signal line also. So weekly chart also indicates that overall positional trend of the Nifty is bullish. Now this is a Bank Nifty weekly chart, which is looking much stronger than the Nifty. So last week we saw that Bank Nifty outperformed the Nifty, and for last three consecutive weeks we see a significant outperformance coming in the banks. So the chart is looking stronger, and the next resistance for the Bank Nifty is seen somewhere around here, the high of this particular candle, which was placed at 43,100 zone. Before that there is a short term resistance around 42,300. So above 42,300, if Nifty sustains, Bank Nifty sustains, then we can expect a level of 43,000 to 43,100. As far as support is concerned, Bank Nifty has got strong support in the zone of, let's say, 41,300 to 41,400. So here we can say RSI has already given breakout on the weekly chart. Indicator oscillators are suggesting strength in the underlying, and this trend line's resistance has also been crossed with a closing basis. So it's a very good strong setup, and we can expect outperformance from the Bank Nifty. Now let us analyze the broader market. Now this is a Nifty weekly chart, and this Nifty mid cap weekly chart, and this is a Nifty small cap weekly chart. Nifty mid cap weekly chart has also given the trend line breakout. This is a downward sloping trend line, and this is a weekly chart. So obviously it is a good development on the medium term charts. And here also we can see that 2 weeks back Nifty small cap index found a long legged hammer candlestick pattern, which is a bullish reversal pattern, and after that we have seen a follow up coming in, and after follow up we have already seen a breakout also from the trend line. So both this indicates that the overall market breadth should remain strong for the mid cap and small cap segment, and here oscillators are also suggesting a strength in the index. So we can expect outperformance coming in from mid cap and small cap as compared to Nifty. Now let us look at the global market setup. Now I have taken the MSCI World Indices and MSCI ACWI Index. Both these indices are suggesting how the developed markets are placed on the charts, and this is a weekly chart of MSCI indices. So this left hand side chart is MSCI World Index, and this is the MSCI ACWI Index. Both these indices have been making higher tops and higher bottom on the weekly chart. That means overall trend of this particular underlyings are positive. But as we can see over here, after rising for consecutive 3-4 weeks, they have reached to the previous swing highs. So that can act as a short term resistance for MSCI World Index as well as for MSCI ACWI Index. So primary trend of both the indices is positive, but however we feel that these indices have reached the resistance zone. There could be a running correction in developed markets going forward, but overall setup still looks convincing and promising, and overall buy on dips kind of view is there in the MSCI World Indices from going forward. Now let us look at MSCI emerging and Asian markets technical setup. This is a weekly chart of MSCI emerging market index, and now as we can see over here that this is a flag pattern which was developed, and after that we got a breakout. So flag pattern breakout is considered to be a continuation of an uptrend, and we have already seen the 20 days average 20 week average has crossed the 50 week average on the upside, which is also a bullish indication. So emerging market is placed very strong on the chart. Now let us look at the Asian market index. This is a ex Japan MSCI index. This is also having a similar pattern. This is a flag pattern breakout, and 20 week average has crossed the 50 week average on the upside. So this is also a bullish indication. So as far as global markets are concerned, the technical setup is quite strong, and it is going to augur well for the Indian market as well. Now let us conclude. Nifty has been rising for last 9 consecutive sessions. Nifty has surpassed the previous swing high of 17,800. Next resistance for Nifty is seen at 18,135. Immediate support for the Nifty is seen at 17,700, which happens to be the previous trading session low. 50 days and 200 days EMA coincides at the 17,500 odd levels, and therefore it could act as a positional support for the Nifty. Nifty has registered a downward sloping channel breakout on the weekly chart. Indicators like disparity index, RSI and DMI have turned bullish on the charts of index. Technical setup of Bank Nifty looks stronger than Nifty, and therefore we can expect it to outperform the Nifty. Bank Nifty resistances are placed at 42,300 and 43,100. Support for the Bank Nifty is seen at 41,300. Nifty mid-cap and small-cap indices have registered a breakout from the downward sloping trend line. Market breadth is likely to improve from here. Global market technical setup, as we have discussed and shown through the charts of MSCI indices, which is very bullish and which augurs also well for the Indian markets from here on. Weak dollar index favors the bullish bets on the equity markets in the short term. So dollar index has been going down, and it has got negative correlation with the equity markets. So falling dollar index is also a good sign for the overall world market equity indices. Now after 3 consecutive weeks of rise, we can expect some running correction or consolidation in the Nifty. However, looking at the overall trend, it seems that the downside in Nifty would be limited. Market is expected to remain stock and sector specific bullish in the next fortnight. So friends, our view is that dips may come after 9 consecutive sessions. So there has been a 3 weeks, so running correction or consolidation cannot be ruled out. But looking at the overall picture, we believe that every dip should be considered as a buying opportunity, and supports and resistance we have already shared. This can be utilized for entry and exit positions. So that is what I wanted to share. Thank you all of you.
Thank you, Vinay. Now let's invite Siddharth to share his views from derivatives. Over to you, Siddharth.
Welcome to the HDFC Securities Derivative Outlook on 15th April 2023. I will be covering on Nifty, Bank Nifty and IT sector. This is a Nifty feature intraday chart of last 4 sessions, where we can see Nifty gradually increase and close near 17,826 level, whereas open interest has come down, suggesting a covering of short position in the last week. In IV has from the higher level, it has come down to the lower level, suggesting a lower option premium, where in case of PCR was around 1.19 level, which is neither overbought or oversold level. This is the intraday chart of Bank Nifty of last 4 sessions, where we can see Bank Nifty has gradually increased and currently trading at 42,132 level. In that, open interest has gradually come down, suggesting a covering of short position. We can see IVO in the initial days, initial start of the week, the IVO was on the higher level and gradually it has reduced. But on Friday, last half an hour session, IVO has again came back to its highest level, suggesting a higher premium for the option segment for the Bank Nifty. PCR was trading on the lowest level in the start of the week, but towards the end, it has trading at a higher level, suggesting that as in Bank Nifty has increased, traders are adding more put options to hedge their position. This is Nifty put call option chart, where we can see at 17,900 to 18,000 level where maximum call rating has already happened, suggesting a resistance on that level in the near term, whereas 17,800 has a maximum put option writing, where suggesting a support around that level in the near term. If Nifty breaches the 17,800 level, then we can expect Nifty heading towards that 17,500 to 17,600 level in coming sessions, where the maximum call put writing is already happened. This is a Bank Nifty PCI chart where we can see at 42,500 to 43,000 where the maximum call rating is already happened after the 42,000 level, suggesting a resistance around that level in the near term. Whereas Bank Nifty has a good support around 41,500 to 42,000 level where maximum put writing is already happened after 42,100 level. So in coming session, if Bank Nifty holds about 42,200 level, then we can expect the Bank Nifty heading towards that 42,500 and 43,000 level. This is FI long to short ratio in the index future segment where we can see the ratio has moved from 0.28 level to 0.65 level in last 4 sessions, suggesting a covering of short position by FIs in the index future segment. This is a point and figure chart of Nifty future and Bank Nifty future. In case of Nifty future, we are expecting resistance around 17,900 level in the coming session. If it's facing resistance around that level, then traders may expect a minor correction in the Nifty where Nifty will head towards 17,600 to 500 band in coming session. In case of Bank Nifty has already given a breakout of double top buy pattern and currently facing resistance under 42,200 to 300 level. If it in coming session in Bank Nifty able to cross that level, then we can expect Bank Nifty heading towards that 43,000 level in the coming session. Compared to Nifty and Bank Nifty chart on the point and figure is looking good, where we can expect 43,000 level in the coming session. Where in Nifty we can expect a minor correction. This is a sectoral open-ended data analysis where we can see in the banking and realty sector where we are seeing a build up of long position, whereas technology sector short build up we see a build up of short position. So Nifty has almost 30% weightage in the technology sector. So we can expect a Nifty correction in coming session, whereas banking and realty will continue to outperform overall Nifty. This is a heat map of last 1 week where green is indicating long build up, blue is indicating a short covering, yellow is indicating long unwinding, and red is indicating short build up. Where you can see AU Bank, IndusInd Bank, where we can see a build up of long position, whereas Eicher Motor, HDFC Life, we have seen a short covering, and PFC and BF Software, we have seen a long unwinding of position, and pure short build up of seen in persistent system and LTIM. Basically, both the are IT sectors, IT stocks. This is outlook for Nifty and Bank Nifty for the next 1 week, where we have seen a short covering in the Nifty future, and Nifty has a good support on that 17,800 level. If in coming sessions, if Nifty reaches that 17,800 level, then we may expect Nifty heading towards 17,500 to 17,600 level in the coming session. In case of Bank Nifty is continuously outperforming in the last 1 week compared to Nifty, where Bank Nifty has a resistance around that 43,000 level. If it is crossing that, it is sustaining about that 42,000 level. In case of Bank Nifty, if Bank Nifty reaches that 42,000 level in the coming session, then we may expect minor correction in the Bank Nifty. But overall, compared to Nifty, Bank Nifty is looking good. So we may expect Bank Nifty heading toward that 43,000 level in the coming sessions. That's all. Thank you.
Thank you, Siddharth. So let's summarize. It seems that the US FOMC is about to end its aggressive interest rate cycle. If we were to look at the possibilities as per the Fed futures, there is a 78% chance that the Fed will increase the interest rate by 25 basis points in the next meeting, which is on 3rd May 2023, and after that it can pause. Now, many of you would like to understand why this is important. So, when FOMC pauses the interest rate cycle, it is considered generally good for the markets. Why is the case? Let's understand. So, because of the higher inflation, Fed is increasing the interest rates. The higher interest rates is impacting the consumer spending in US economy. Consumers are a major part of US economy, and as the economy slows down, the corporate earnings are impacted, and that is leading to underperformance from the stock market. As the Fed will stop increasing the interest rates, the steady interest rate will stop putting pressure on consumer spending, which leads to better economy and better corporate earnings, which is generally considered positive for the stock markets. So, pausing of interest rate cycle will generate an environment which is conducive for the stock markets. Same is the case for the India. RBI has already announced a pause, so that's a good environment for broader market to do well. Though our indices have gone up quite significantly over the last 1 month, so because of the poor performance of IT stocks, some pullback is likely into Indian markets, but overall the general environment and backdrop is positive for the Indian markets. Now the gap created by the slowing IT earnings growth will need to be taken up by other sectors, So that is the key for the overall markets, whether other stocks and other sectors are able to generate earnings growth, which leads to higher stock prices. So all eyes should be on the earnings season starting from next week. That's all for this video. We hope you like this video and find the information provided useful. If you have any comments or suggestion, do reach out to us. Thank you.